Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live again. Welcome back to the Token Metrics Farewell to Forrest live stream. I'm your host, Bill Noble, joined by Team Token Metrics, Jad, Forrest, Garage, and Mehdi. Gentlemen, welcome.
Thanks, Bill.
Thanks.
All right, so what we're going to do is, because we had some technical difficulties, right, we're going to have Forrest go through the agenda again. Forrest, is that cool?
Yeah, that's fine. I'm sharing my screen here, and the Token Metrics live agenda today is Bill's going to take us through his legendary market update, but we're also going to have guest speaker Garage give some color commentary on the market as well. I'm going to walk through the total crypto market cap prediction, right? What is this crypto market doing? Are we going into a bear market? Are we going to see a parabolic run? What is going on, and what is the risk to buying crypto right now? We're going to try to give you some answers there. Then we've got, if you stick around, a little promo code gift to the community. I believe it's going to be 35% off all Token Metrics subscriptions for the next 24 hours. So make sure you stick around for that. We've got a video message from Crypto Love, and then Ian's going to come on and do a little roundup, and we can just kick it and talk crypto if we've got some extra time. So without further ado, let's jump into the market update with Bill.
Okay, thank you, Forrest. All right, friends, this is your market update. Roundtable discussion. The inflation numbers are coming out. Consumer prices come out on the 12th. Producer prices come out on the 13th. We're going to talk the tactical view, and then we're going to try to keep that in line with the big picture, right? In sum, just to start right off, I think you have to figure out how to trade crypto in between these inflation numbers. Because honestly, when they come out, I can't believe they're going to be good. So let's jump right in. This is a tweet from a famous, German economist. And this chart shows the following. It shows combined central bank balance sheets of the three biggest countries' balance sheets. That's probably US, Europe, Japan. All right. What you're noticing is that the balance sheets have gone flat at the top in the top right. Now you're like, what does that mean? Well, when central banks print money, it doesn't just float off into the air, right? When central banks print money, they use it to buy assets, right? And they put those assets on their balance sheet. For example, if you bought a motorcycle, that motorcycle, if you pay for it in full, is an asset on your personal balance sheet. So what has happened to the balance sheets of the three biggest central banks? Well, they've stopped growing. The printing press has pulled in for a pit stop. Now, Garage, our chief quant guy with a broad Wall Street background, put you a little bit on the spot, but can you give us some color as to why a slowdown in the growth of the balance sheet could trigger or has triggered a decline in risk assets?
Certainly, Bill. One of the things, and I think you can see from the chart that you're showing, is that when there's a deceleration in monetary base, monetary aggregates, at the margin, that excess cash which was available doesn't flow. It doesn't flow into risk assets. And as there's less cash available for risk assets, it tends to flow into the real parts of the economy, particularly in an inflationary environment. And so that usually, the markets start to anticipate that, and usually risk assets start to sell off or at least flatten. And that's more or less what we've seen, at least in the last, 60 days or so in, global equity markets.
All right, thank you. So if central banks, or particularly the Fed, means business about higher rates, lower inflation, and at least, you could say less money printing or stable money printing, that's what's causing crypto to trade so poorly. Now, let's look at stocks. Yesterday, Mike Novogratz from Galaxy Digital said, from here on out, the future of crypto will likely be determined by what happens in stocks. So when Garage refers to risk assets, the granddaddy of them all in terms of market cap for risk assets is stocks. So what we're looking at here is S&P futures. So the good news is that there's a trend line, and every time S&P futures drop below the trend line, all right, it normally looks really scary, and then it comes back above. Where did I learn about this? Well, I knew how to draw trend lines before, but I didn't learn how to really use them to trade and make money until I started working with Forrest. So for this market update, the big question is, will equities like or not like the inflation statistics coming up this week? Okay, my guess is there'll be an oh my God when the numbers come out, and then a rally. And then the market will figure out what to do next. For stocks, sell in May and go away, and a problem in October or September is very likely. Now, if that's true, and everyone knows that, the top in stocks could come before that. It could be one last rally up. That's my guess. So the numbers print on the 12th and 13th. Everyone goes, oh my God. And then on Monday and Tuesday of next week, perhaps, there's sort of a relief rally. That relief rally is definitely, in my mind, not investment advice, an opportunity to get out of stocks. All right. Now, I don't want to over massage it, but these inflation numbers are not going to be good. They're not going to be good for equities, and they may be good for Bitcoin, but only after an initial sell-off. Now, let's take a look at the most speculative part of the equity market, called the Ark Innovation ETF. Okay, this is run by Kathy Woods. It's highly speculative. Many of the companies don't have earnings, right? Now, overall, I call this the basketball thrown out of a window formation, right? Like the bowling ball out the window formation, right? Bowling ball goes out, hits something, and hits a ledge, and then it goes off. Now, the good news is ARK is probably really oversold and is due for some sort of bounce. Could be a big bounce, could be a small bounce. However, as you can see, the bowling ball has got a downward trajectory, and these speculative stocks may be in trouble now, in March, or in May. But ARKK needs to be on your watch list on TradingView. Now, let's talk about interest rates. Inflation up, interest rates up. Interest rates up, bonds and stocks down. A lot of times, interest rates up also can hurt crypto. Okay, so here's the good news. Bond yields or interest rates have gone up a lot last week. They've gone up so much that we are wondering if it is actually time to buy bonds for safety in fear of a decline in stocks. Garage, can you shed a little bit more light on your view on this?
Sure, Bill. The like the chart you're showing there, I believe that's the 200-week moving average of the 10-year yield. So it's every time it's gotten around that level in the past, we've seen a reversal in yields. The other thing is, as you said, like the inflation numbers are probably going to be pretty poor. What we are likely to see is essentially what we've seen so far is the sell-off into the anticipation of these really poor numbers. We should probably get some weakness in equities. We get enough weakness that'll catapult a rebound in bonds. The other point related to that is when you look at the rise in yields for the 10-year as well as the 30-year, they haven't risen at the same pace, and so the difference between those two yields, which is called the curve, they've flattened. The spread between the 30-year yield and 10-year yield has actually gotten smaller. That's usually indicative of a economic backdrop which is weakening, and if that's the case, that'd be another propellant to allow for a rise in bond prices and a drop in yields.
All right. So in sum, Garage is painting this sort of picture where, inflation is bad, the Fed is tightening, and the economy is weakening. Now, I think this is going to be all good for crypto at some point, but I think that point's later in the year. In the meantime, you're going to have to figure out how to make money in crypto in between these legacy disturbances, which will be these inflation numbers. So this stream is trying to give you the macro backdrop, which we gave you. And now we're going to try to show you how to play crypto around these events. Okay. So let's talk about Bitcoin. Nobody wants to sell Bitcoin at 40K. No one wants to be short, all right, when the market is down this much and it's on support as of now, right? There are huge orders below 40K and everyone knows it. I told Forbes that yesterday, so now everyone really knows it, okay? Most likely, Forrest detailed in his work that if there is a bounce in crypto, say on Monday, it could be up to 46K. That's a trend line that Forrest has. It's also the 21-day moving average on the futures contract. Now, just as a scenario, if there is some sort of huge dump off the inflation numbers and Bitcoin cracks 40K, I think the CME Bitcoin futures contract could fill a gap, hit 34K, which is another level we discussed. That's the 21-month moving average. And I personally think that if it dumps all the way down to 34, the ensuing bounce could be to either 46 or even 52. So if it's really a bear market rallies can be breathtaking. But most likely, it holds 40, finds its way to 46, and then we decide. But you've got to have scenario numbers coming up for a number, because not only are the economic numbers very hard to predict, but the market judges the next trade based on not just the number, but the number versus the expectations from Wall Street. So everyone's going to want to cover shorts in front of 40K. That's what's happening now. The real rally, I think, is Monday. The only question is from what level. Now let's look at Ethereum. On the daily chart, I have Gann support at 3,000. Duh, right? Nobody wants to be short ETH below 3K. That was pretty good support back in September. Okay, 3,000 is also the bottom Bollinger Band on the ETH weekly chart. Okay, so it's a way of saying ETH is sort of overdone short term, right? No one has interest in taking it below 3K. So that could lead to a bounce now or Monday. Right now, if ETH were to sort of like plummet through 3,000, since a Bollinger Band is pretty useful in terms of defining how far a market can go all at once. Like when you get to the bottom Bollinger Band, statistically, it kind of means the market is stretched out. Jad, have you got it in you to tell us like what's a Bollinger Band? What's two standard deviations? Do you think you can help us with that?
Yes, sure, Bill. So basically, Bollinger Band is a measure of true range or volatility. So it's essentially taking that average, let's say the 21-day moving average, and it's calculating how many standard deviations are you away from that average. And standard deviation is just a measure of historical distance that you are. So if you hit the lower Bollinger Band, usually there's supposed to be a bounce if the price was to revert back to its 21-day moving average.
All right. So in this case, we're looking at a weekly chart, right? And that band literally means ETH's too stretched out. So again, no one wants to be shorted at 3K. And if it went through 3K, there would have to be a major reason for that to happen. All right. So on one hand, stocks look terrible. On the other hand, crypto's already been really beaten up. And I'm kind of hoping for crypto stability after this number. Now, let's talk about crypto stability, tokenmetrics.com, and how you play it. This is the Kraken Daily Index. Okay. We have Chainlink, Kava, which is up 10% today, which is a DeFi play and a possible transform. I think they're trying to transform to a layer 1. Terra Luna and Cosmos. Okay. Now, very interesting that one of the best videos we did all of last year was my colleague Mehdi talking about Cosmos and interoperability. Mehdi, do you want to give everybody an executive summary on both Cosmos and Luna? And when you hear the story out there, keep in mind that this is not only something that the humans are coming up with, but the AI as well. Mehdi, off to you.
Yeah, thank you, Bill. It's great to kind of see the AI picking up on this. So Cosmos, when I interviewed Mr. Pang, who is the CEO of Tendermint, he basically highlighted a couple of things which the market were mispricing. The first thing market kind of mispriced was this illusion that Atom has a horrible token utility, but it's changing now. The way it's kind of changing is they have adopted a structure very similar to Polkadot and, for that matter, even Avalanche. So if there are new projects that are building on Cosmos and they do not have enough resources to basically build their own validator set, they can leverage Cosmos in-house validator set. So the validators do not only earn 15% staking rewards from the Cosmos inflation and security, but also staking rewards from the other project that are building up. So one validator can theoretically run 15, 20 nodes, and basically you get airdrops and staking rewards of those 20 projects. So that's amazing. Secondly, you can't discount Cosmos community. It's one of the most close-knitted communities out there. So if there is any new project launching, whether they have the resources to run their own validated nodes or not, they will airdrop you if you're staking your Atom. This is because they would like to market themselves, and it will be used for marketing. So you're basically gaining different range of token utility, and market did not see this coming. And one of the other things, if you go on their wallet Kepler, you see a lot of validators are actually VCs. So VCs who bought Atom at $5, $4, even less than that, they're still holding it, even though it's at $40 now. So that kind of shows to me those VCs who basically bought it early, they still think there's a lot of alpha left, and I am in agreement with that. So that was the thesis for Cosmos. Uh, the second thesis of Terra, I've already done a deep dive on Terra, so you can watch the deep dive on Terra. Uh, I have one slight concern in current market. I think Luna basically absorbs the utility of Terra, so Luna will be much more volatile in this current market. So this is the reason why our indices are not picking up Luna, but instead are picking up Terra, because Terra is a stable coin, and you can put Terra into, let's say, Anchor and earn 20% reward. So I think that's the rationale why our AI index have picked Terra. But I think going forward, when the kind of bearish sentiment runs away, it dilutes away. I think then shifting from Terra towards Luna kind of would make sense. I kind of also see why our AI picked up Chainlink. I think Chainlink is one of those oracles that have a monopoly, literal monopoly on the oracle market, and the incumbents could not kind of compete with them. And I think they're also uh, kind of launching new features such as staking, which I think is amazing. But at the moment, I haven't done a thorough deep dive on Chainlink, but I'm very positive on Cosmos at least. And when the bearish sentiments go away, maybe converting your Terra into Luna will also make sense.
All right. Thank you, Mehdi. Very interesting that the Kraken Index wants to have some of its money in either Pax Gold or a stable coin, along with interoperability and some DeFi with Kava. Okay. If we go to crypto.com, okay, we also see things like Chainlink, Harmony, and Kava is in there, demonstrating the power of the AI to pick up not only Chainlink, which has been there for several days, but Kava as well. So in between these disturbances, you're going to want to follow our AI indices where? At tokenmetrics.com.
And one more thing, Will, about internet computer. I think there's a lot of sentiment kind of converting. We might potentially have Dominic in our 100x show going forward. I think internet computer could be a very interesting contrarian play. The market hated it because of centralization, but if you kind of see their vision, they want to literally create an internet of computers where Ethereum, Bitcoin, and other blockchains are just like a small part of it. So the vision is big. Uh, I'm going to prop the founder regarding the centralization of the project. If I kind of get a hint that they will be moving away from the centralization part, this could also be a very interesting play when the bull market returns.
Very interesting. Thank you. All right. So I want to direct some of the conversation and put the round in round table. So this is the chart of Rune. Okay. I've been looking at this over the last couple of days. And I worked with both, I worked with Dylan yesterday on our podcast. And one of the things that we were researching was some commentary about not only Rune, but about the future of DeFi. So what I want to do is kick it over to Dylan and just say, hey, Dylan, can you give us a summary of like what we talked about and what the research we were looking at was saying about DeFi in general? All right, Dylan
Yeah, unfortunately, he had to drop out. There was too many people on the stream.
Got it. All right. So
Yeah, I can shed some light on Rune and DeFi 2.0 if you want, Bill. So a few months ago, we kind of covered for our premium customer Convex Finance and Curve. So Convex Finance had that interesting mechanism where you can monetize your governance token. So in DeFi, one of the issues was that, let's say, it's very highly addictive to liquidity, and people are only willing to provide liquidity when they have incentives. So what protocols did was, you basically provide liquidity to my pool or to our pool, and I'll basically give you staking reward in terms of my own token. And their token was mostly governance token. Now Curve Finance came up with this very interesting idea that, okay, Curve Convex Finance already had this interesting idea that Curve token holders get has a very long supply emission, and we can help those people who own Curve and who are staking Curve to earn even more money by giving them our tokens as well. And basically, doing so, they were basically able to have more than 40%, 50% token allocation of the whole curve. And then, since they have the whole supply of curve themselves, there were other composable dApps being built on top of it. So, for example, people were saying to Convex Finance holder now that we'll give you bribe if you basically help us vote on which pool will get the next highest APY. So you kind of see this interesting dynamics playing out where governance token were regarded as useless, hopeless, and now you kind of see interesting structure where you have things like convex finance giving you ability to monetize your governance power. And on top of that, you also had Curve, which also improves the governance power by giving you more incentive and more governance power if you stake it for longer term. So DeFi 2.0, I think it's part of my thesis that you saw interesting projects like Tokmak and Convex Finance, where you were able to monetize your governance power. But I think going forward in 2022 and so on and so forth, I don't think they'll be the only one. There'll be plenty of projects out there who are going to mimic the same thing. And we will kind of get a reignition of governance token where governance token will have more power and more utility. And now talking about Rune, uh, Rune has been a very interesting play. It's very cheap. It's owned by a lot of very high caliber VCs such as Multicoin and Delphi. What I loved about Rune was that they have a vision of a multi-coin world where, let's say, if I have Bitcoin and I want to swap it with Ethereum, I don't want to go to uh, and both are lying in different chains, and if I want to do it, I can do it through their swap and through the exchange without going to a centralized exchange. And whilst I do the swap, it's not a repped Ethereum or it's not a repped BTC. I would still hold the true utility of the tokens. So if you kind of see bridges out there, when you kind of bridge your asset, you get a wrapped Ethereum, wrapped BTC, and you kind of lose the utility of the native token. So, for example, when you're saying Monero, right? Or Zcash for that instance, that's a very interesting privacy coin. But when you're kind of swapping it, like a regular swap, you although get a wrapped coin, but that wrapped coin do not have the privacy capabilities, which was the reason why we are buying that coin. So Rune solves that, and Rune also has this ability. While solving this issue, it will accrue a lot of value of different tokens it will swap. So their treasury going forward will have an index level exposure of all the different assets So this is one of the reasons I like it. Now the issue is it's such a big vision, it's such a complex vision. It will be tricky. So they were hacked a couple of times, on-chain hacks, because hackers were able to find a loophole, and they're working hard on it. I think once they kind of fix that issue, it's, I think amongst the DeFi play, I like it more than, let's say, Tokemac or Convex Finance, because with this token I get a better token utility, and I think what they're doing is much more difficult to replicate. And once a thing is much more difficult to replicate, that thing starts to have network effects and starts to establish a moat, a competitive advantage that nobody can copy.
Interesting. All right. So this is a theme where, DeFi is coming back. And I think, maybe it's just a simple yes or no question, but Garage, this idea that if there's a problem with risk assets, particularly stocks, I mean, is it logical to assume that not only may people flood into treasuries, but they might also flood into DeFi as a place to park money? I mean, does that make sense? Is there anything you can add to that?
Oh yeah, no, absolutely. Because there's been enough participation, I'd say, overall in the crypto market that it's being viewed as an additional asset class. That when you essentially follow the money, capital moves around, and so it would offer a conduit for additional investments. I mean, DeFi is in particular interesting because the increasing movement away from legacy financial institutions, essentially the disintermediation process, in part what Mehdi referred to. And so I think it's critical to keep abreast of some of the tokens that we've discussed, and we'll continue to discuss and use those as opportunities to enter that space. Particularly, if we do see some significant weakening in equities, part of that weakening will be in financial institutions, and it'll start to shed more light on alternatives to traditional avenues of finance.
All right. Thank you, Garage. Now, as I look here at one of our portfolios, Jad, do you want to give us kind of executive summary as to, the creation of our portfolios, how well they've been doing, how useful they are? And I think more importantly, like, what was your role in building them?
Yes, sure. So the idea behind these indices or baskets of tokens was to make it very simple for people to leverage our technology and be able to follow it, not exactly to the letter, but follow it to make the profits that our indices have been making. And we are giving multiple options to our customers. They can choose on which exchange they are trading on, and depending on which exchange they can trade on, we will build this automated portfolio for them. And there is a daily, weekly, and monthly time frame depending on what you want. And as of now, the daily indices, all of them outperformed Bitcoin by big factors. I think the best performing one was Gate.io that did like a 900% since July. So the daily portfolios have been performing extremely well. And the way we construct them is essentially we want, for the short term, like daily and weekly, we don't want to diversify too much because we're holding them on a very short term, and we don't want to be paying a lot of transaction costs. So we'll have 5 coins, and the way we get these 5 coins and the weights for these 5 coins is through a quantitative model that leverages our token metrics grade. Since our token metrics grade has been performing extremely well, we wanted to use it to alter this portfolio construction and be able to get coins like this that have a pretty strong momentum.
All right. Thank you, Jad. So, folks, this discussion is a reminder of a very important thing about this YouTube channel. All right. Token Metrics is not one guy or 2 guys. It's a company, right? It's a company that does technical analysis, quantitative investing tactics, and artificial intelligence. Okay. So for Forrest today, for his goodbye, we wanted to make sure that we all were here to not only salute him, but show you a part of the machine that he has been an esteemed member of for all this time. So that, folks, is the market update. Now I believe we are trying to jump into Forrest realistic price prediction. Just in case everyone knows, you know, from a token metrics point of view, Forrest invented this idea of switching from the hyperbole of YouTube to realistic price predictions in a bull market, so people could navigate and make the best decisions possible. I learned a lot from this. So Forrest, one last time, take us through a realistic price prediction.
Yeah, absolutely. So we're actually not going to be focused on any particular altcoin or even Bitcoin. We're going to be doing a realistic prediction for the total crypto market cap. And this is a chart that I haven't revisited in a while, but I wanted to talk about because, to be quite honest, I think it's the most important chart in all of crypto. And I think it's the most important chart in all of crypto because it is all of crypto. This is total cryptocurrency market cap. So this is just the market caps of Bitcoin and all altcoins combined. And what you're going to see as we look in this zoomed out view of weekly candles here is that we're currently trading at about $2 trillion, $1.98 trillion in total cryptocurrency market cap. You're also going to notice that this has been going up and to the right. That's why I am so bullish on crypto, among the fundamental reasons. But just from a chart perspective, total cryptocurrency market cap is getting bigger and bigger and bigger. And it's the fastest growing asset class that I know of. I think it's the fastest growing asset class in the world. And it's outpacing a lot of disruptive technologies that we've seen in the past, with like the adoption of television, the adoption of streaming, the adoption of the internet even. It's just outpacing that growth. And this is why I'm happy to have a portion of my portfolio that I'm just in for the long haul. I'm just investing in the long term. However, I do have a portion of my portfolio that I like to trade from time to time with shorter term timeframes, because the good thing about cryptocurrency and the total crypto market cap and the space as a whole is there's tons of alpha to be had. There's tons of volatility and there's tons of inefficiencies that we can take advantage of in the short term. So I do want to draw your attention to the fact that this is a linear trend line, but this scale here on the right is a logarithmic scale. So when you have linear growth on a logarithmic scale, what that ultimately equates to is exponential growth. Crypto is growing absolutely exponentially. So the next thing I want to draw your attention to is just this ascending wedge pattern that we're currently in. Now, Bill just got through with a market update talking about how we may very well be primed for a bounce here. And I actually think this is as good of a place as any to bounce. I do think that, as Bill mentioned, if we get a washout, I'm going to cut to Bitcoin for just a moment here. If we get a washout, we could see $34,000 to $35,000. And in fact, one of the things I've been talking about recently is a trip back up to 46K, which could be a good place to sell a little bit, right? And just in case we go to 35. And if we break through 46K, we can buy it on the other side of the trend line. Now, back to total cryptocurrency market cap. I want to talk about this trend line because it's historically what has held support even in bear markets. We've only really broken below it on 2 occasions, and those were the 2 best occasions to buy crypto pretty much ever. One being back in the pandemic, March of 2020, when this first hit. But we would expect that this trend line should hold as a level of support should we see this exponential growth continuing. And if we look at the fact that the total cryptocurrency market cap recently peaked at $3 trillion and is only currently at $2 trillion, I don't see any reason why this exponential growth can't continue for some period moving forward, whether that's 2 years, 4 years, or even the next decade. We're looking at an entire asset class that is only at $2 trillion when compared to a single stock, Apple, at $2.8 trillion, or a different asset class, gold, which is $11.4 trillion, right? So the entire asset class, Bitcoin plus all altcoins, is currently only about $2 trillion. And if we were to actually zoom in and look at this idea of days to fair value, right? Days to fair value is just simply how long would we expect this trend line to take to catch up to the level that we're currently valued at. Well, we're currently valued at $2 trillion. Well, where does this trend line intersect that level, $2 trillion? Well, roughly December 2022, right? Roughly a year from now. So if we were to buy crypto today, we would say that roughly 343 days would go by until we would expect this trend line to catch up and act as support. Meaning, if we went into a bear market today and we broke down to this trend line, how long would it be before we expect to be back to the levels that we're currently at? Roughly 340 days. And in terms of risk, this is a fairly low risk level compared to where we've been for the vast majority of this bull market. In fact, the last time we peaked back in May, right, we were roughly 665. Actually, I drew that a little bit incorrectly. It's actually closer to 700 days to fair value, right? And if we look at our most recent peak at $3 trillion, we were roughly 600 days to fair value. If we look at previous peaks in our total cryptocurrency market cap in previous bull market cycles, we can see that we had peaks as high as 1,200 days away from this trend line and 1,449 days away from this trend line, respectively, right? So we know the crypto market is a speculative market, can withstand very, very high risk levels, very high levels of speculation, levels that we really have not yet seen in this market cycle. We've peaked at roughly 600 to 700 days to fair value. But if we just arbitrarily said, well, halfway through the year, July 1st, halfway through July 2022, and Bill has some excellent analysis showing that we could see, if we do see a parabolic move, we could see that in Q3 October, but that's a little bit far away. So I just wanted to pick an arbitrary date. Just remember that that parabolic move may not be until October if we get that. But we are, and I hate to be the guy talking about, I hate to be the YouTuber, right? This is a realistic prediction, but I hate to be the YouTuber talking about parabolic moves when we're sitting at the bottom of this trend channel and we're in the midst of kind of a market sell-off. But we are making a very similar ascending wedge, which, by the way, are usually bearish patterns. But we're making a very similar ascending wedge to what we saw back in 2017. We're just seeing it take much longer. It's actually taking about 3 times the length of time for each of these moves to the top and bottom of this wedge. So if we get a bounce here, or we even start to trickle up like we did back in 2017, we could potentially see some sort of parabolic move in 2022, right? So with that in mind, I want to talk about how high could we realistically see this total cryptocurrency market cap go? Well, I think realistically by July, or maybe it will take until October, but I just picked July arbitrarily because it's halfway through this year. It's 6 months down the road where our human minds are really good at small chunks of time. We know how long 3 months is. We know how long 6 months is. I start talking about 9 months to a year. People might get a little impatient, a little too far out. So July of 2022, halfway through the year, if we were at 600 days to fair value, 600 days to fair value, which we've surpassed on 2 occasions this market cycle, once with our first peak and again with our second peak, which was around 600 days to fair value. If we were to peak around that same level sometime in July, we would have a total cryptocurrency market cap of $5 trillion, right? 2.5 times where we're currently at. 2.5 times of where we're currently at, right? So the market can absolutely withstand a move upwards, right? And again, there's all this global macro stuff going on, and we can talk about stocks and S&P 500 and money printing all day long. But I want to get to the bottom of what can this speculative market really actually withstand. Even if everything goes well for the crypto market, what can we actually withstand? I would argue 600 days to fair value is completely fair, and $5 trillion at some point in 2022 is completely fair. And that's a 2.5x from where we're at right now. Now, what's the downside if we were just to fall out of the bottom of this pattern and go back down to this trend line and into a bear market? What's the downside? Well, the downside is about 37%. And of course, certain altcoins would way underperform that. Some altcoins could get washed out. A 37% move downwards in total crypto market cap, that could be brutal for some altcoins. For other altcoins, they might not even flush. We're starting to see the decoupling of a lot of these really solid projects, layer ones, interoperability plays like Cosmos really do well despite Bitcoin being down. Right. So the risk is about 37%, but the potential reward to buying right now is actually 155% realistically. And that's a pretty good risk to reward ratio, if you ask me. Now, I also just, want to talk about, for reference, Apple and gold, right? If we were at 335 days to fair value, which is really close to where we're at right now in terms of days to fair value, we would be at about $2.8 trillion by July of 2022, which is the entire crypto space as a whole matching Apple's market cap, one stock's market cap. And we're talking about an entire asset class. So again, completely realistic. And then, of course, we have gold, which is, I believe, the largest asset by market cap currently. And that would require a speculative bubble of about 946 days to fair value by July. And maybe that could be some scenario that we see, maybe we'd see 10 or $11 trillion sometime in October or December if we did see a big parabolic move out of the crypto market cap right now, which I know a lot of people a month, 2 months ago when we were here, everyone was saying, we're going parabolic. Well, we didn't go parabolic, but I don't think that it's unreasonable to assume that we could potentially towards the end of the year. So just keep that in mind. So I hope this was helpful, and I hope it helps frame in your mind what is realistic for the crypto market, at least in the short term, over the next 6 to 12 months. And with that, I do want to go back into our slides before we go back to everybody. And we have done a coupon code gift to the community. So if you use the coupon code Forrest35, that's Forrest with 2 R's, Forrest35, you can get 35% off all Token Metrics plans, both monthly and annual, for the next 24 hours. So make sure you do that soon if you haven't signed up for Token Metrics yet. Now, I believe Crypto Love did a little video message, and if our producer could pop that up now, we could watch his video message. And even before we do that, I just want to say thank you for all the kind words in the chat that everybody's been giving me. A lot of people are asking, am I leaving in the chat? And a lot of people are asking, where am I going? So to add a little bit of color there, I am regrettably leaving Token Metrics. I've enjoyed my time here very, very much. It's definitely bittersweet, but I have decided to venture out on my own. So I won't be leaving YouTube. I still have a YouTube channel called Crypto Stackers and a website called cryptostackers.pro that I'm going to be devoting my full time and attention to. So I'm very excited for that. But again, it's bittersweet because I hate to leave Token Metrics and all the fantastic working relationships that I've built here over the last year. But Token Metrics has never been in better hands. So I'm excited to see what Token Metrics does in the future and excited to collaborate with Token Metrics in the future.
All right. Thank you, Forrest. All right. Here comes the video message from Crypto Love.
Oh, we don't have volume on that. Might just take a second to get a little volume. And if we can't get volume, that's okay. We can always just drop the link in the description. Yes, so no volume, but I actually haven't gotten to see this video yet, so maybe we can just drop the link in the chat or in the description below.
All right, the description. I'm pretty sure that video link. I also know the coupon is in the description of the video below. One question I had is from Forrest Analysis, which again is always top notch. I mean, Garage, is there any such thing as crypto decoupling from equities, or is there a scenario where once equities re-rate that could trigger a massive flood to crypto? It's kind of an asset allocation question.
Yeah, no, absolutely. I mean, Forrest, raised an excellent point, and I think the chart he was showing with respect to the total crypto market cap allude to that, and that is, historically, when you look over really the last 100 to 200 years of legacy markets and things, transformations which have have eventuated in parabolic type moves in a different asset class, it's usually been driven by either disruption or a change in confidence. In our current environment, what is most likely to happen is there, I think the bond markets will indicate that, is when there's a increasing loss in confidence with respect to fiscal and monetary authorities, meaning governments and central banks, capital is going to seek a home, a safe haven. It's not going to be in the bond market, because that is essentially, investing in the full faith and power of governments. So that capital is going to move into equities, and it's going to move into crypto. Crypto, given its very small total market cap, as Forrest alluded to, will be like a huge amount of, like a huge tidal wave trying to enter a space which is very small, and so the moves could be extraordinary.
Okay.
If I can just add, like I have a theory as well. So at the moment, we are not seeing any tokenization of financial assets. So in 5 years' time, 10 years' time, I do see a tokenization of equity. So equity basically getting inside blockchains, VC getting inside blockchains, real estate getting inside blockchain. So there will be kind of correlation, higher correlation with equity. But one interesting thing will happen, in my opinion, is that and Bitcoin, as well as some of the money market instrument in crypto, will decouple. I still feel Bitcoin is more of a safe haven investment rather than risk asset investment. So I think we haven't yet seen that decoupling, and I think going forward we'll see that. We'll also see multiple sectors emerge, and we'll have different sector leaders, and different crypto projects within those sectors will behave differently with their own fundamentals.
All right. Thank you, Mehdi. One of the themes that I talk about in the market update, and these two gentlemen have driven home, is that you want to be able to protect yourself in crypto. So if you get a rally between January and March, okay, that's a time to allocate to stable coins. Now that rally could last 3 days or a couple months. We don't know, but we do know that you want to have capital and not be wrecked for when that parabolic starts. Forrest talked July, I've talked October, okay? There's going to be a day, like Garage said, where everybody, and that means everybody, wakes up and goes, it's time to move to crypto. All right, so speaking of crypto and crypto love, I understand we can try that video again.
Yeah, let's try that one more time.
Boom shakalaka, what's up, Forrest? Randall here from Crypto Love. I hear that you are moving on to greener pastures from Token Metrics, and I just wanted to say thank you so much for everything you've done. You will be sorely missed. Your crypto foresights and hidden gems were an absolute blast whenever I would watch them on Token Metrics TV, so thank you for everything that you've done for the Token Metrics community. I wish you the best of luck, and if you ever want to come on my channel, you are more than welcome. So, lots of success, man. You'll be missed. Have a good one. Peace.
Awesome. That's fantastic.
All right.
Thank you everyone for the kind words.
Thank you, Crypto Love. All right. One question I had is, Garage has a deep Wall Street background, perhaps deeper than mine. Maybe Garage could give us a flavor and tell us from his experience running huge funds, tell us about Forrest as a trader. Give us some flavor and your opinion on that.
That's a pretty easy ask. I've had the great fortune of getting to know Forrest over the past several months, and I can tell you a few things. One is his investment analysis is unreal. It's uncanny. It's very thoughtful, very diligent. He doesn't speak about things that he doesn't understand. He doesn't BS. He's very and I think that is reflected in his accuracy. With respect to his trading acumen, he has strong innate skills. I've worked with a lot of traders over the past several years. Some who are extraordinary technical in nature, some who are quantitative, some who are fundamental. Forrest has a very good mix of all of those characteristics, and it's reflected in his forecasts and the way he anticipates movement in different coins and different assets as well. He's very talented. He'll be sorely missed. It's been a great blessing to have us with him. It's been great for me to learn from him, not only about the crypto market, but also his trading style. And I cannot say enough kind words about him. He's just extraordinary.
Thanks,
Thank
Garage.
you.
I appreciate that.
Yeah, thank you. All right, I understand we have a highlight video of Forrest, sort of like ESPN style. Do we have that?
We just landed on the moon in the Lambo.
The risk is fairly low because it's just been following this trend line long term. So the risk is you come down to this trend line. If it breaks the trend line,
Coming back to you with the samples.
you still have a very, very strong base of support between 70 cents and $1.
We just landed on the moon in the Lambo. Taking pictures with the zoom and the angle. We'll be coming back to you with the samples. Our predictions coming soon with a halo.
So Nano, look at this long-term weekly chart. This is insane. Nano absolutely pumped like crazy back in 2017. This is a highly anticipated video. This is a video or a concept rather, that I get a ton of questions on all the time. Mutable X, I really like this project. It's a layer 2 scalability solution for NFTs. In my opinion, there's a chance that when things start moving exponentially, there's a chance that it just blows through.
All right, thanks to our video production crew. For me, let me say a few words. First of all, I echo what Garage has said. You know, Forrest is one of the best traders that I've ever worked with, okay? And he's definitely in the top 10, I think, of crypto traders out there worldwide. Now, if you don't believe that, well, come back and check with me in a year or two, because I believe it, and soon everyone's going to believe it. So don't forget to check out Forrest at Crypto Stackers. Now, one other thing I can say about Forrest as an analyst, hey, my job is to have something to say no matter what happens. Now, I can do that, but there have been many a time where I have gotten into a meeting with Forrest before we're going to go on the air or do a presentation, and I've just looked at him and said, dude, what do you want to do? Talk to me, right? Forrest is not only a great trader, but he's the analyst's analyst, right? And it's very unique in markets to have somebody who can trade, control their emotions, but also have enough personality to do YouTube and also have the scientific knowledge to be able to communicate that through YouTube. So it's trading, it's style, and it's scientific knowledge about markets all put together. Now, where are you going to find that? Well, you're going to find it at Token Metrics and Crypto Stackers. So if you're a Forrest fan, stay one. If you're not a Forrest fan, become one, right? Because as me and Garage were hinting at, you know, Forrest is one of the best guys out there in crypto. All right, gentlemen, Forrest, have we got anything else on the agenda?
Yeah, well, first of all, I mean, thank you for all the kind words there, Bill. It's been an absolute pleasure to work with everybody at Token Metrics, but it's especially been a pleasure to do the live streams with you. It's been so much fun, and some of my best memories at Token Metrics are from live streams with you and I. I do want to share that the Token Metrics team did get me a little something here. It's a poster I'm definitely going to have framed, but I don't know if you guys can see that all right, and if the words are backwards or straight, but it says, "May the price action always be on your side, and never forget the moon is not the limit to the moon and beyond." So that's the Token Metrics mantra, and it's a pretty cool poster of a guy running on the moon, or running in space towards the moon, an astronaut there, and has all the Token Metrics team members' names down at the bottom. So thank you, Token Metrics, for that gift. It's very meaningful, and definitely get that framed, and it's just a very cool piece of art. maybe make it into an NFT while we're on the crypto topic there. So yeah, I think as far as the agenda goes, I believe that rounds it out. If I don't know what our time limit is here, if people have to go or not, we can always chat crypto. Otherwise, I think that's all we had.
All right, folks, we're going to wrap it up. Producer, is it okay if we wrap it up?
We haven't heard anything else from any other guests, so I believe we're good to go.
All right, friends, this is the Farewell Forrest live stream brought to you by tokenmetrics.com and Crypto Stackers. This is the farewell to Forrest. He will be with us for another week. Please stay tuned. If there was ever a reason to hit the like button, it's today. Hit that like button, people. I want to thank all of my esteemed guests and all my colleagues from Token Metrics, right? Token Metrics is the roadmap to making money in crypto. So stay with us, stay with this channel, and check out the discount code in the description below, Forrest35 with 2 R's to get that 35% discount in honor of Forrest. I'm your host, Bill Noble. I will see you tomorrow.
All right, we're live.
All right.
Updating the titles now, though.
Okay.
Psych overtime.
So what I miss?
Well, we did a conversational market update. Everybody kind of went around. I asked some questions, Medi Garage, Jad and Forrest did a good job of keeping the discussion going. And, we kind of went out on top by giving Forrest a whole bunch of love. Maybe we could continue with maybe me and you with maybe a story about how Forrest, how Forrest came to Token Metrics and grow while he was here.
All right.
Almost like with you leading the way. So it's almost like another stream with you at the head of it.
That's awesome. I think we're still live. The same stream, I think.
Are we still on?
Yep. We're
Yeah.
live.
Okay.
All right.
We are live.
Hello, Crypto
Yeah,
family.
there's-
Welcome back.
Sorry, guys. There's actually an echo right now. I believe, Ian, that's your
My mic?
mic. There's an echo with the stream.
Huh.
If you're playing the stream right now.
Oh, okay. All right. Sorry. It's muted. It should be. Can you hear it?
No, I still hear the stream.
Okay. How about now?
All right, we should be good now.
All right. Hey, Crypto family. Yeah, this is Forrest's farewell. I mean, Forrest, I wish you the best. You've done an amazing job. We've learned a lot from you, margin pressure levels. And I wish you the best with everything. So I guess what do you look forward to the most, Forrest?
Thanks, Ian. I appreciate that. Yeah, just looking to venture out on my own, just kind of be all in on crypto, but live the life of crypto freedom. Looking forward to being independent in the sense that I'm going out on my own and I'm responsible for myself, and just venturing out and seeing what I can do in the crypto space and hopefully make some waves on YouTube. Really hoping to get to 100K subs soon. Trying to just educate the masses with just really the basic fundamental strategies that I think a lot of people coming into crypto, they're trying to get into crypto, but there's really no crypto financial advisors out there, and you kind of get put in a situation where all of a sudden 2 weeks ago you'd never placed a trade, but now you're buying stuff on Gemini, you're buying stuff on Coinbase, but you don't know what a stop loss is, and just really educating people and the masses of how do you manage not only to make money in crypto, but definitely not lose money or get drawn into kind of not the shadier side of crypto, but the more dangerous side of crypto, where you see so many horror stories of people just, going into crypto and then they go broke because they just turned down the wrong path. And if they'd have just stayed on the right path, they'd have been, a crypto millionaire in no time. So really just trying to educate the masses about crypto, the opportunities in crypto, but also just really fundamental basic risk management strategies and trading strategies. And we just want to provide that to people for free on YouTube.
That's awesome.
I remember during Forrest's interview, it was like a group of people, and they gave Forrest a very scientific task, right? We're a data-driven firm. And I remember I was last to say what I thought of Forrest. And all I said was, you got to get this guy on TV. Get this guy on TV. And I think everybody laughed because they sort of knew I was right. Forrest has helped us a lot with our data management and things like that. So back over to you, Ian.
Yeah, I recall Forrest when he applied for the job. He applied for the job online. We had a grueling interview process. First there was a phone screen, then there was a 2-hour investment analysis test that Forrest did pretty well on. Then he had a 2-hour interview where he basically had to do trading for an hour with the whole team just grilling him, then having him do deep dives on projects and his analysis. And now he's was with Tokenmetrics for 1 year pretty much. All right. So then same thing with Mehdi. Mehdi kind of joined the team as well. Bill Noble joined the team. Garage joined the team as well. And I think we've done a really good job putting together a great team of analysts in the market, right? Because as the market goes up and down, we've still been very objective, very data driven, no pump and dumps essentially. All right. And for anybody out there who's looking to join the Tokenmetrics family, we're always hiring, right? So if you want to join the team, feel free to reach out to us.
Yeah, I remember the interview process at Tokenmetrics it's top class. It's quite difficult. So you're not going to see anyone joining Tokenmetrics that doesn't know what they're doing. It's almost reminds me of the way that Ian screens crypto projects is the way he screens people to work at Tokenmetrics, because ultimately people are an investment too, and it's a grueling process, but obviously absolutely worth it. But it's important to note that not only is Ian and the team finding hidden gems within the crypto space, but also just with people here, obviously with Bill and Garage and Mehdi, and the hiring process is just really top notch here. And because of that, I think that's why Ian's been able to build such an incredible team here.
All right. But I think the most important question we all have here is, what do you think of Nano?
Yeah, so it's this kind of and I know people laugh at me. It's as far as an investment this year, it bottomed out around 20 or 30 cents back in March, and it pumped all the way to like $18 to $20. And even on Huobi, on one exchange, it wicked up to like $100 over on Huobi. And if you bought in at that mania and you weren't buying the trend line, Nano's definitely been a disappointing investment as far as dropping from $20 all the way recently to around $3. But for me, it's a long-term value investment, and I really, really like what the project is building. I like their vision. I think it's one of the strongest projects that has put aside all other missions in the space. All of it's not smart contract enabled. It's focused on being just a pure cryptocurrency, a pure currency play. And to be quite honest, and obviously Bitcoin's the first mover, I just feel like Nano is what Bitcoin really set out to be. It really solves so many of the issues that Bitcoin actually has in terms of, fees and scalability and throughput issues. And Bitcoin's fantastic, and I think it'll be a store of value and used as a store of value. But I think there is going to be a rising demand for hard digital money, and a lot of people think that may be tied to stable coins in some way, and it probably will. But ultimately, stable coins are pegged to the dollar, and we can see that the dollars still get printed at a rampant rate. There's still inflation. So if you're in a stable coin and you're transacting with a digital stable coin, there's still that issue of being subjected to inflation. And what I think Nano has built and is continuing to improve upon is building a really robust form of hard money that actually has that layer of value transfer and does it really, really extremely well with instant feeless transactions that are ultimately extremely eco-friendly as well. So I know it's not been the best 2021 investment unless you were able to buy really early on in January at cheap prices. But for me, it's my biggest bag, and I continue to add to it.
That's awesome. All right, speaking of biggest bags, Mehdi, what's your biggest bag?
Yeah, there are a few. I've recently accumulated Cosmos Near. So before the ETH dump, I was able to sell some of my Ethereum for Near. There were a few catalysts which I thought were very interesting for Near. So first you had Aurora Bridge, and I kind of saw activity, on-chain activity, where a lot of developers were deploying their smart contracts to Aurora from Ethereum. And then they also have this project called Octopus Network, where Polkadot projects can cheaply deploy their parachains on Near. So those were the catalysts I thought were really good for the price action going forward for Near, and it kind of seemed undervalued. Apart from that, they have a sharding mechanism in terms of their architecture. So ETH is also adopting a sharding mechanism. But if you look at the founders' previous experience, it kind of seemed like there was a very good founder market fit. So they were specialists when it came to sharding, and their previous employer experience, let's say MySQL and Google, they were working on sharding. So for those reasons, I got really bullish on Near and I bought it. Now I'm also getting bullish on AVAX because I think market has kind of started to forget about the fact that AVAX will be a multi-chain going forward. And I have like a small presentation which I can quickly deploy if time permits.
Yeah, I mean, does our audience want it? If you want the presentation, post down below in the comments. But I think people would love it. Maybe just make it brief.
Yeah, I'll be really quick. So if you can see my presentation over here, firstly, with the on-chain data, you can see the Avalanche daily transaction. It's gradually it's going up. Like if you kind of do a log of it, it's going up exponentially. And now this is the interesting part. For me, one of the fundamentals of AVAX is the unique addresses. The unique addresses of wallet. So you can see the unique addresses of wallet even during even during the crash, it's just going up. And even whilst the price is going down, the fundamentals are still intact for long term. People are adopting it at exponential pace, and this is the beauty of network effect. Even if you kind of see the network utilization, it's quite high, and we haven't seen AVAX working at 100% of its capacity. So even if the transaction did 2.53x from here, it can still handle the capacity. Developer activity is also just going up and up. C chain is basically their Ethereum chain, so a lot of different projects are building on their C chain, which is amazing. Developer activity has also bounced back recently, and I think this is to do with their subnets. So one thing the market kind of ignores about AVAX is that it has the ability for other permission and permissionless blockchain to be deployed. So for example, if in the future you have a Cardano virtual machine, or if you have a Bitcoin virtual machine, or if you have a Solana virtual machine, you can deploy those on subnets. And when you deploy those on subnets, you can basically have all the dApps that were built over there, and you can migrate them. So which I thought was very interesting. They can capture a lot of multi-chain narrative going forward, and also the fact that it's not just those virtual machines. You can also do it with financial tokens, so security tokens like real estate, in the future, maybe VC equities and stuff like that. And they can have some rules set up for the validator set that, let's say, only those validators that are KYC can join them. And there could be an anti-airdrop mechanism for a lot of wallet addresses. So all of these interesting things, I think market hasn't realized it, and there haven't been good research out there that kind of show it to them. And for me, I feel like this is something which the market is missing out. And obviously, I don't know if you guys can see it. The ecosystem has just been flourishing. And what I really like is just not the copy paste projects from Ethereum, but native projects are also growing. I'm very, very excited about the gaming and metaverse sector going forward for Avalanche, and this is one of the reasons why I continue to like it, and I think I'm going to accumulate it going forward. Again, this shows you monthly active addresses, and now let's just talk about the valuation. You have Ethereum over here, you have Binance, Solana, Luna, AVAX, Cardano, Dot, and Matic. So I think AVAX is on the slightly like on the cheaper side if you compare it with other layer ones. And if you kind of compare it with the total value locked, it becomes even more interesting. Like it's cheap. So at current prices, it's slightly more expensive than Ethereum, but you're also kind of pricing in more growth because of these subnets and also some of the projects going forward from Ethereum to AVAX. So for me, it looks one of the interesting plays. And technically speaking, I believe there are two supports as well. So if you kind of see this trend line over here, downwards trend line, you can buy on the trend line over here around 72, between 72 to 75, and historical support has already also been established around that level. So these are some of my thinking when it comes to AVAX. I think long term it's a good project, and as Forrest has kindly alluded to again and again, that crypto at the moment is just $2 trillion industry, and if it goes to 50 trillion, 100 trillion in, let's say, 5-6 years, 10 years, you want to have some part of your portfolio in layer ones, because you don't know what's the next trend. It could be social token, it could be fan token, it could be metaverse, it could be anything. But layer one, at the end of the day, captures that through its token utility and tokenomics. So you have to have that in your portfolio. And apart from Near, apart from Luna, apart from Polkadot, AVAX is also one of those options that you can incorporate in your portfolio.
Yeah, I mean, fascinating. I definitely agree with all that. I think people have known me as an ETH maxi for the last few years, but I mean, I think last quarter especially, I kind of got off the bandwagon. I mean, I still have ETH. It's still my second largest holding outside of Helium. But I think Avalanche, to me, is ready to blow, right? That's why I bought some. And just seeing the ecosystem and seeing the issues Ethereum is having with scaling, with high gas fees, almost anybody who's new to crypto that I meet, they're either on Avalanche or they're on Binance Smart Chain or Solana. They don't really care about Ethereum. They don't care about nostalgia and the past, right? Ethereum might have been the best for DeFi, but all the newbies, people who are new, retail investors, they're all heading towards new chains, because they don't care about the status quo. They care about what actually works. Like this week, I was in the process of trying to put together a DAO on smart contracts, and I spent probably almost 2 Ether in just gas fees, right? And that's not scalable. And not everybody has 2 Ether to blow trying to launch and deploy a DAO and update it and all that stuff, right? So if people can do the same thing on other chains with better economics, I think it makes sense. So for me, I view it as I'm getting cautious with Ethereum and ETH 2.0, and I'm looking for ways to hedge that risk. And I'm hedging with Avalanche. In the past, I've talked about Near. I think Near is going to do very, very well. That's one that I may buy as well sometime this year. And I think those are the 2 layer ones I think have upside. Solana is good, but Solana I think it's already gone up a lot. So if anything, I'd probably wait for a bear market or a huge crash or correction. But in terms of those that are still undervalued, I think Near and Avalanche are pretty good. All right. How about you, Bill? What do you think of the market? What's your biggest bag? What are you most bullish on?
Okay, good question. So right now, until the inflation number, I'm actually sitting in Don't Laugh Bitcoin. I want to deploy the Bitcoin into some of the things we've talked about. Luna, Sandbox, Decentraland, AVAX. And I definitely want to get involved in Rune, not investment advice. I'm also looking at, I guess I would call them Rune connected NFTs, right? That actually may be my first big move into the NFT space, looking for things that are inside, that, kind of Thor chain infrastructure. So I also think DeFi, as we talked about earlier, is going to be something that's going to grow regardless of what happens to the crypto market or risk assets. I think capital is going to flood in, and I think Ian is right that, the phantoms, the AVAXs of the world, may wind up going up as other risk assets or crypto or even Bitcoin wind up going down. So in sum, I view it as not the crypto market, but as a market of cryptos. And I'm waiting for that opportunity to be able to jump in, develop a portfolio so that when the October or summer parabolic starts, that I'm there for that. I'm not only there, but I've got good trade location.
All right, that's awesome, Bill. How about you, Garage?
So I've mostly been using the weekly indices. So currently got like off of Coinbase, Cosmos, Alchemex, and Chainlink was the main ones. AVAX, Mehdi actually got me interested in it, and that's worked out pretty nicely. Other than that, like Bill, just seeing how this month plays out in terms of some of the other markets, because I think that's having a strong influence on the rest of the crypto market.
All right, awesome. Okay, anybody with any other comments?
Yeah, whilst we were speaking, I think we got the AVAX founder to come on our 100x show. So in next couple of weeks, we'll perhaps have a podcast with them. So if you guys have any questions after the live stream, just post it on the comments below or just tweet those questions out. We can ask those questions with the founder of AVAX.
Awesome, that's gonna be big. That's Amin, right?
Yes, either Amin or the Ava Labs John Woo, either one of those.
Okay.
Yeah.
Awesome. Okay, let's keep it pretty short for us, as we like to say.
We just landed on the moon in a Lambo.
We'll miss you. And it was
Thanks,
great
man.
working with you. Looking forward to doing more collaborations with you and Crypto Stackers. And yeah, even though you've left, you're still part of the family.
Thanks, Ian. I appreciate that. It's been an absolute pleasure to work at Token Metrics and build relationships with everybody here. And it's definitely a bittersweet move, but looking forward to the future and also just looking forward to the future of Token Metrics and watching what Token Metrics continues to build in the space.
Yeah. All right. Well, thank you, everybody. That was a nice overtime session. And until next time, as we like to say, the moon is not the limit to the moon and beyond. Have a good day.